Hi guys, welcome back to another video. So in today's video, I'm just going to give my contribution on whether synthetic indices are manipulated or not. Are they manipulated or not? What do you think? Are synthetic indices manipulated or not? It's a common question that usually come up when I talk to people and I told them, hey, if you're struggling with Forex, go and trade synthetic indices on Deriv. Deriv is just one broker, one of the many brokers that offer these synthetic indices. If you want to try them out, if you don't know what they are, if you want to try them out and have a feel of them, use the link in the description box below. You just need $5, $10, and you can have a few of these synthetic indices. By the way, what are synthetic indices? Basically, synthetic indices are financial instruments that are designed to simulate the behavior of real world markets. So if I'm going to be brutal, they're kind of a fake market, but there's a difference between simulated and fake. These are simulated. So what they did is Deriv or whoever their partners are, they came up with the complex algorithms or mathematical models to mimic the real world markets like your stock exchange, your forex markets and stuff, to come up with these synthetic indices. And that's how they came up with this volatility 75 index, volatility 100, whatever, boom 1000, boom 500, jump index, whatever that they offer. So that basically gives you an idea of what these synthetic indices are. Now, I usually get asked, are they manipulated? And many people have got different thoughts on this. So in this video, I'm going to try and give my 2 cents because I feel I have a probably yes, but at the same time, I'll give you also why I continue to trade them and why I think why I do encourage people to go and trade them. So the first argument that usually come up when people say they are manipulated is because of design and transparency. There's a question mark regarding design and transparency there. What am I talking about? Synthetic indices on Deriv, they were actually designed and are offered by Deriv on their own platforms. It's like the casino. Basically, the casino creates their own games and they are offering them in their own house. And if I continue to use this example of the casino, you know, when you go into a casino, the odds are stacked against you massively. The house makes sure you do not win. It's reality. I am not saying that people don't go to the casino and win, but understand that the house always wins. But you could also argue that it's the same with forex trading also. Like the big guys, it's documented how the big banks and the big guys, the big players, always manipulate us, the smaller guys, retail traders and stuff in the forex markets. It's well documented. So you wouldn't really, you wouldn't really be hard on Deriv and say, you guys, why are you manipulating this if it's manipulated? Because it happens in every market. But yeah, the problem is usually regarding transparency. Deriv do say that the their synthetic indices are actually monitored by a third party. That's all that we know, that there is a third party. I myself, I'm not speaking for others. I myself, I've tried to look for this third party and I've never really found this third party, but maybe other people have found this third party, or it might actually just a statement. There is no third party that is monitoring all this. It's just Deriv what designing and offering these synthetic indices and also monitoring and doing everything and making sure everything is tip top. And end of the day, their business, they are probably going to want to make some money. So there is a concern regarding transparency there. the platform is offering these products, these synthetic indices that it also designed in-house, and then we are supposed to trust it that they are not going to stack the odds in their favor. I mean, the second point that people usually love to bring up is also regarding regulation, which is a valid point if you look at it, but it's not exclusively to derive. The argument is that regarding regulation, you find that derive. I'm using derive here because that's the platform that I use, and also that's the most famous synthetic index broker in the world at the moment, I believe. You find that they are not in heavily regulated markets. They don't operate in the UK. They don't operate in the US. They don't operate, I think, in Australia. They don't operate in many of these heavily regulated markets where financial players are supposed to by the book, because otherwise the government will come down heavy on them if they are caught out doing some shady stuff. That's another argument that if they are so good and if they are transparent and everything is above board, why are they in these regulated markets? Fair enough, but you also find that there are also forex brokers that are not operating in the UK, in the US, Australia, and it doesn't mean that they are doing anything shady because they are not in those markets. So again, you can look at this thing both ways. Another thing that people love to do is to also mention that around regulation is how deriv used to be binary.com. I think it was binary.com, I think, yeah. Then they became deriv. Some people love to say that that's how usually these companies, these fly-by-night companies, like especially in the crypto world, where people are just stealing people's monies, that's how they do it. They open a company today, they start taking people's monies, then they disappear and they come back rebranded, and they do the same thing again, they disappear, they come back rebranded. So why would deriv rebrand and stuff like that? I don't know why they decided to rebrand. I mean, every companies do rebrand for various reasons. So those are all arguments that people come up with, that hey, if you find that a company is just changing its names and things like that, it means they are running away from some shady stuff that they were doing, and now they are rebranding to try and attract new customers, new money, and things like that. Again, I want to hear your thoughts in the comments section below. So let's hear your comment in the comment section below. Again, conflict of interest is another issue that always come up. Like we said, unlike in forex trading, you find that, for example, the broker that I use for forex trading, the link is in the description also, they don't own the forex market. They don't own the forex market. Many brokers out there for forex, nobody owns the forex market. They are just conduits that we use to access the forex market. Unfortunately, or I don't know, is it fortunately or unfortunately, for deriv is the broker, but deriv is also the company behind these synthetic indices. And people love to say there's a conflict of interest there. Theoretically, in theory, they will probably be manipulating these things to their advantage, because it's their product and they are running the show. So why should they lose money? Which is a valid argument. But again, in the forex markets, even if you have these brokers as conduits, we still have problems with brokers. You know, it's everywhere. So you cannot single out synthetic indices in that regard, because you also have shady brokers that have been known to manipulate forex traders, even when they don't actually own the forex market. So it's things that you can. Let's hear your thoughts in the comment section below. Now, my thing also is there are all these arguments. I'm not trying to defend a derivative. I get nothing from defending them or from attacking them, really. But what has not stopped me from trading these indices is I've not failed to withdraw my winnings. Like in forex trading, I've won money and I've lost money with deriv, and I've not failed to withdraw my profits when I win. That's why I'm still trading with them. Are they manipulating the indices? They probably are, or maybe they are not. But for me, I'm really not bothered about that. I'm just there to make money. As long as they pay me when I win, that's all that matters to me. And they've been paying me when I win. That's why I've still been trading synthetic indices. I think this will be almost 3-4 years now. Trading volatility 75 index, boom and crash, and all those things that are offered on deriv. Maybe they are manipulating me in the background. They are making me win all along so that I become what? Complacent, and then they will make me lose a huge sum of money in the future. Who knows? I don't know. But my experience so far has been that when I win, I get paid out. They pay me out. So I don't know if it matters whether it's manipulated or it's not manipulated. I mean, leave your thoughts and comments in the comment section below. I'll be interested in hearing what you have to say. Otherwise, guys, I'll see you in the next video. Bye.